What's up, guys? Albert here. Welcome back to the channel with another video. Today we are talking about the real estate market in Rhode Island. What happened this year? How did the market respond to the high interest rates, to the uncertainty in the economy, election year? There was a lot going on, and obviously the market and consumers, they had a decent response to everything that was going on. So I'm just going to cover everything in this video right now. Before I get into that, subscribe to my channel if you have any questions. If you're looking to move here, if you're looking to buy real estate or sell real estate, I am your resource. I get calls from the YouTube channel all the time from people who are either moving into the state, out of the state, pretty much from all over the country, but even people who live here as well, or looking to buy or sell. If you're an investor, if you have investment properties or portfolios that you're looking to sell, or even if you're looking to purchase portfolios in Rhode Island, I am a resource. I'm working with a lot of people that either are looking to sell a lot of investment properties, starting from 10, 15 to 100 units in portfolio type deals. And I also have a lot of people who are looking to buy those kinds of properties. So I'm connecting a lot of investors with buyers like that as well, on and off the market deals. Reach out to me. My information is right below. If you have any questions, you know where to find me. Let's get into the video. I know I haven't made a video like this in a while. Life's been just busy, crazy. I've honestly just been busy with work, everything else. And on top of that, my wife is pregnant. We're expecting a baby this month, actually. So life's just been very hectic. And I have people reaching out to me all the time, literally asking why I'm not making these videos, what's going on. Somebody even asked me if I'm still in the business, or if I'm still in the business because I'm not making these videos, which was kind of like a wake up of, first off, people are watching these videos. They're important, they're valuable, and I should be making more, especially if somebody's asking me if I'm still in the business, because I definitely am. So I wanted to cover a couple of very simple things here today. Just wanted to cover the month of October in real estate in Rhode Island, a couple of number of sales, what interest rates did in this month, and then my forecast for the winter market. As you guys know, the winter market in Rhode Island, especially also in New England, it fluctuates. It's a little bit different. People don't move as much. The number of sales usually drops by about 20 to 25%. It's just the winter. It's usually how it happens. The holiday season, these things are super normal, but obviously the market still continues to move and sales still happen. But I just wanted to make a couple of predictions of what I think is important, what I think is going to happen in the next 2 months here, and then what I expect is going to happen in 2025. The summer market was a little strange. It wasn't as busy as it used to be because of the interest rates, because of the uncertainty in the market, because of the election year. A lot of people were kind of in the fence, on the buy side and also on the sell side. A lot of people were not really sure what direction they were going to go. They wanted to see who was going to win the election. That was important to a lot of people to see, because a lot of people had the winner of the election. They kind of had that connected with how the economy was going to go, which is interesting because if you just look at the market in general, usually after the election, the market always moves in a positive direction. One thing that I learned the other day that a financial advisor told me, the one thing that the markets don't like, it was uncertainty. As long as the markets know what the next 4 years are going to look like, they're going to respond to it accordingly. But obviously, different policies in place, there's going to be a different response to those things. So that part was important. And now with the elections over, with a winner in place, we know the direction of where the market is going to go. Obviously, the stock market already reflected that, record highs and all that stuff. And the interesting part about real estate is that literally the next day after elections, I've had a couple of people reach out to me asking for properties, asking to reconnect, to look at deals, look at investments, even single family homes, because some people feel positive about where the economy is going to go in the next 4 years. So here's what I want to cover, right? The summer market was slower. It was slower than that last year, not by a lot, but the number of sales was definitely a little slower, right? So I want to say it was down about 8% as far as the number of sales go. But the average sales price still increased year over year. The average sale price has increased in Rhode Island. So the median sales price in Rhode Island right now is 6.6%, right? So it's up 6.6%. The median sale for a single family home is $485,000. That's up from last year where it was about $479,000, right around there. So it continues to go up. It's interesting because I talked to a lot of colleagues and friends who are realtors all over the country, like Texas and Florida and California. And when you're kind of working in the state, either Rhode Island or Massachusetts, which I cover, the market has been up here. Real estate prices are still up. There's still multiple offer situations on most of the deals that hit the market, especially if properties are in good shape and if they're priced correctly. You still are getting over asking on houses. There's multiple people bidding on houses. So it's interesting because that's not happening all over the country right now, right? So it's also interesting because it's not only is it not happening all over the country, but it shows how the Rhode Island market is very different compared to the bigger markets like Texas, Austin, or LA, or even Boston, or even New York. And the reason why I say that is because the majority of the buyers who buy in Rhode Island is regular, mostly working class, middle class people who are buying homes that are not directly, I know this kind of doesn't make sense, but they're not directly impacted by the economy. So now we have an influx of people who are moving to Rhode Island and who are purchasing property here. But if you look at the rate that people move to Rhode Island versus Texas versus Florida versus Boston, right? It's probably 1 to 20. So that effect there is not the same. Obviously, during 2020, 2021, and 2022, the number of people that moved from New York, from all these cities to different cities was crazy. And then it caused prices to spike by 25, 30, 45% in all of these other cities. We never seen those kinds of spikes in prices in Rhode Island, but we definitely have seen prices spike by 7.5%, 8.5%, 10%. If you look at different towns, certain towns, prices have spiked by 20%. But that was kind of the average of how the prices have gone up in Rhode Island in the last 4 or 5 years. So it was a reflection of obviously mostly interest rates, but people internally purchasing property in Rhode Island. Now, when interest rates shot up, and obviously they've stayed there now for 2 years, here's what changed. The number of sales has dropped by close to 45%. So the number of sales is extremely low. There's just less sales in the market. But even though there's pretty much half the sales in the market that there used to be, there's still prices are increasing at an above average rate in Rhode Island. Like I said, the median sales price for a single family is up 6.6% year over year in Rhode Island. And that's the difference. Even though we have right now interest rates are 6.92, right? And throughout the spring and summer market, they've stayed there. They've been between 6.30, 6.8, 7%, 7.1, 7.2 at some point. For just a tiny hot second, they dropped at about 6%, 5.9, I believe, for just like a hot second a month ago. But rates have been here. So obviously with that in mind, you logically would think that, okay, if interest rates are so high, prices are going to go down. But it's interesting because prices are not going down, and they haven't gone down literally since I've been doing this, since 2017. We've never seen prices go down. We've seen the number of sales go down, and that's completely different. And the reason why these are important is because we still do not have enough houses in Rhode Island. And because we don't have enough houses, prices are continuing to go up, although interest rates are up. Like the number, again, I'm repeating myself, but the number of sales is down, but the prices itself continue to go up. Here's a couple of other things, right? In 2024, in the month of October, the number of single-family home sales was 680. The number of multifamily homes was 142. In 2023, multifamily homes was 124, so it's up by about 20 houses, about 7%. And then single-family home sales in 2024, 680, and in 2024, it's 657. So it's very similar, and it reflects that we've had similar interest rates, so the market is in that space. I also go to a lot of events with a lot of realtors, as I like to connect nationally and locally. And one thing that I'm finding is that there's a lot of realtors who are having either the best year of their career or the worst year of their career. And to no fault of anyone, but it's just how the market is kind of reflecting, right? So really the people are feeling the most pain right now in our industry are obviously realtors and lenders, because the number of sales, again, has dropped by 45%. But still, if you're a homeowner, if you're looking to sell your home, you don't have a problem. houses are still up 6.6% up, right? So you're still going to get top dollar. You're going to get the same money you would have gotten if you had sold your house in 2022 or in 2021 when the craziness was happening, right? So that's the interesting part. If you are a seller and if you're thinking, oh, I missed the boat to maximize my profits in my house, I wish I would have sold my house in 2021, you most likely will sell your house for more money today than you would have sold it in 2021. Although that doesn't make sense because those lines down the street of people buying houses and making multiple offers, the data shows that right now you are going to sell your house for more money than you would have sold it in 2021. Here's some more data for you, right? Number of sales is 691. A number of single family home sales is 691. Number of pending sales right now is 893. It's down 2.2%. And then the active inventory is about 2.4 months. I think it was 2.3 last time I checked. So now it's 2.4. So it's literally staying there. That's the month's supply, right? So we have 2.4 months supply of inventory. If nobody lists the house in the next 2.5 months, we have 0 houses for sale. That's really what that means. It's really simple, but it just shows you how low the inventory is. And even though these interest rates are high, there still are people who can afford to buy a home at these rates. And because there's people who can afford to buy a home at these rates, that's why we have still low inventory. We don't have a lot of new construction homes here. We have a affordability crisis. So affordable homes, we have huge crisis. We're short about 40,000 homes of affordable homes for people. So that's also a big problem. And then because it's hard to get permits, there's not enough land, there's not enough builders, it's expensive to build, land is expensive, not a lot of people are building new construction homes. So that's the other challenge. And that's why this is difficult. And that's why it's the number of sales is staying where it is. So that was kind of the update. So that was the update and kind of So that was the update, and I'm giving you an idea of what the market did in spring and summer, why it did what it did, and all this data for you to have an idea. With that said, here's my prediction of what I think is going to happen in the winter and then going into the spring market. The first positive thing is that now there is certainty in the market. People feel more confident of the future of the country. You can agree or disagree with me on that. That's not the point. The point is that I'm just looking at the data. I'm looking at the amount of people who are already calling me. People feel more confident in that. So that's good. Optimism and confidence in the market is always good. And because of that, the market is going to move a little bit more than it did in the last 3 months. So there's going to be more homes for sale and there's going to be more buyers entering the market. The other thing that I think is going to happen is that I think interest rates in the next month and a half or 2 months, maybe 3 months, are going to drop. And if interest rates drop to 6%, which they did a month ago, right? If they drop again to 6%, the number of buyers is going to increase by about 25% right away, just like that. The number of buyers who can enter the market right away, just like that, is going to increase. What do you think happens if the number of buyers increases just like that and people enter the market right away? Prices will go up. Right away, prices are going to continue. So I predict that home prices are going to increase year over year, month over month, a little higher than what they are right now. If it's 6.6% higher right now than it was last year, it's going to be 7.5 or 8% entering spring market. That's my prediction. That's what I believe is going to happen. So that was mostly on the single family side. An interesting thing that's happening on the multifamily side is multifamily properties in Rhode Island have gone up so much in price that as investments, most of them do not make sense anymore. So if you look at cash on cash return, if you're looking to put 20% down, if you're looking at a 6% cap rate on an investment in a 3-unit or a 4-unit property, the chances that you find that are extremely slim, extremely slim. And here's why. Because a lot of buyers who are qualified to purchase a property today, who have, let's say, an FHA loan, right? Buyers who have an FHA loan qualified to buy a 2-unit property, and they can use the rental income for 2 things. First off, to get pre-approved. That counts as income towards your pre-approval. What means is that now it gives you more purchasing power to buy a 2-unit property. And also, they also live in those properties, right? So most of the people are buying these 2-unit properties with an FHA loan, which you have to live in there for at least a year. What's happening is, because you have an FHA loan, you have to live in it for a year. The way people are looking at it, saying, okay, if my mortgage is going to be $3,800 or $4,200 or $4,500. If I rent one unit for $2,500, my mortgage is only going to be $1,500, $1,600. So I'm paying less than I would pay for rent to own a property that I could build equity in it, and hopefully when interest rates drop, I can refinance. And rents, by the way, are continuing to go up. So I'm going to rent it for higher and higher. And then one day I move out and maybe I can rent both of these, and I can even have a small cash flow. With an FHA loan, you don't need to bring a lot of money to the table. So that really, whoever has an FHA loan, they're not looking at their cash on cash return, because they're bringing they're bringing $20,000 to their closing table, or $18,000. Sometimes they finance the closing costs. So it's really, they're buying these properties with no money. So what that has done, if you look at two family properties in Providence, you're looking at $650,000, $680,000 for a 2-unit property. What is that? So if you do 680,000, okay, 680,000. If you divide that by 2, you're looking at $340,000 per unit. $340,000 per unit. As an investor, that makes no sense. You cannot purchase a property and you cannot compete with an FHA buyer. So if you're saying, oh, I have 20% down, I'm going to make a strong offer to this person, you literally cannot compete, because they're going to outprice you by $100,000, $200,000, and they'll still be fine because they're going to live in that property. And to them, it makes sense. It makes sense. It's not a bad buy because they're living there. 1 and 2, they are going to be able to rent the other unit, and they're going to have, like I said, a low mortgage payment for $1,800. What's the alternative? Go rent something for $2,500 when you can buy it. It's very simple. It makes sense. But Rhode Island, especially Providence, used to be a really good opportunity to invest in. So a lot of out-of-state investors would come in, and, you know, if you had $200,000, you could buy a couple of these multi-unit properties with cash flow, and you'd be in really good shape. That's pretty much gone. You can't really do that. The only way you can do that now is if you find off-market deals, properties that properties that need some work, property that needs to be worked on. So you have to do some renovations to them, and you get creative, right? Like you have to make connections and network with people to be able to find deals like that. But that's how it is now. Like, there's no, oh, I'm going to just go buy a property that's on the market because the numbers make sense, because the numbers don't. I'm working with a couple of buyers right now who are in the exact same position. I just spoke to one the other day, and they're telling me that none of these properties make sense as far as cash on cash return. And I have the same conversation that I'm making this video about, which is, no, they don't. The only way it makes sense is if I can find you something off market, or if I find you something that needs work, or some properties in Rhode Island, it's just how it is here, have an illegal third unit. If you have an illegal third unit, you can also rent that as a separate unit. It's a known thing. A lot of people do it here, and a lot of those properties have those extra units. Or if you're in certain areas where you can rent these multifamilies per room, then it's a different conversation, because you can make much more money. So like if you're near the colleges, like if you're near Providence College in the Elmhurst area, you can literally rent out rooms for $900. If you rent $800, if you have 2 units with 3 bedrooms each, you're looking at renting all these units for $800 each per bedroom. So that's a better deal. So that's kind of the idea. That's where the market is right now, and that's where I see it going. If you're an investor, it's hard to find a property that makes sense, and I don't think that's going to change anytime soon. I do think, though, that the average price of these investment properties, even these FHA properties, has kind of capped. I don't see it going higher than where it is right now. I think it's going to stick around. The 2 units, I think they're going to stick around between $600 and $650. The extreme cases are $680, but I think that's where they're going to stick around. The 3 units are around the exact same price point. And then when you get to the 4, 5, or 6 unit properties is where you can maybe make something work and make a couple of things, make sense of a couple of things, because now you're looking at commercial loans, like a commercial deal if you're talking 5 units. So the number of buyers who are buying the commercial deals, like a 5-unit property, goes from, if you have 10 FHA buyers, another 8 buyers with conventional loans. If you have those buyers, when it comes to commercial buyers, you have one or two. So you can find those properties that make sense. The problem is that not a lot of those are on the market. Most of those are being sold off the market just because the people own them. They keep them because they give them great returns, and most of the people are keeping them. But they're out there and it can happen, and it's usually off-market stuff. I do a lot of it's usually off-market stuff. I do a lot of off-market deals as well. If you're interested in off-market opportunities, let me know. Just shoot me an email. I have a list of sellers who are looking to do off-market stuff, sell portfolio deals and things like that. So I can definitely help you out with that as well. I can connect you and we can go from there. All right, so there you have it. These are my predictions. I predict the market is going to revitalize itself. It's going to get busier. I think rates are going to go down, and I think 2025 is going to get busier than 2024 was. I think prices are just going to continue to go up. If you're on the fence, if you want to understand more about what I'm talking about, reach out to me, shoot me an email, or just call me. I'd gladly have a conversation with you, and we can go from there. Subscribe to my channel, and I'll see you in the next video.